few options for your YouTube intro, ranging in tone. Option 1, enthusiastic and direct. Hey everyone, and welcome back to Forex Scope. I'm thrilled to have you here today as we dive deep into the exciting world of GBP JPY. Get ready for some sharp 15-minute and 1-minute analysis, complete with actionable trading signals and a glimpse into future price movements. If you're serious about leveling up your Forex game, hit that subscribe button and the notification bell so you don't miss out on any of our crucial updates. Let's get started. Option 2, friendly and approachable. What's up, Forex Scope community? It's great to see you all. Today, we're taking a close look at GBP JPY, zooming in on the 15-minute and 1-minute charts. We'll be dissecting the price action, identifying potential buy and sell opportunities, and trying to forecast where this pair might be heading next. If you're looking for clear, concise Forex insights, you've come to the right place. Don't forget to subscribe if you haven't already, it really helps us out. Let's jump in. Option 3, professional and concise. Welcome to Forex Scope. In this video, we'll be conducting a detailed analysis of GBP JPY, focusing on the 15-minute and 1-minute timeframes. We'll provide you with essential trading signals and insights into future price trends. For consistent, high-quality Forex analysis, please consider subscribing to our channel. Now, let's proceed with the analysis. The resistance zone is identified by a period of consolidation and price struggle between 23 hours and 23 hours and 45 minutes on November 9, 2025. During this interval, the price repeatedly tested the upper bounds of this range, with the highest price reaching 202.319 and the lowest price recorded at 202.029. The upper boundary of this potential resistance is observed around 203.148, while the lower boundary is seen near 203.085. This price action suggests a significant level where selling pressure may have been present, preventing further upward movement and creating a ceiling for the asset. The presence of multiple candlesticks interacting within this narrow price band indicates a battle between buyers and sellers, with sellers ultimately holding the advantage at this juncture. This area represents a key level where previous supply might have overwhelmed demand, leading to price rejection and a potential reversal or pause in upward momentum. The cluster of candles interacting within this range highlights a significant price point that has historically acted as a barrier to further gains, forming a clear resistance area due to the difficulty the price encountered in breaking through it. The support zone is identified by a period of significant price decline followed by a notable reaction and accumulation between 7 hours and 8 hours and 30 minutes on November 11, 2025. The price dropped sharply to a low of 202.316, indicating strong selling pressure. However, a strong rebound occurred, with the price then consolidating and testing the lower boundaries of this area multiple times. The highest price within this support cluster reached 202.841 and the lowest was observed at 202.316. This price action suggests a level where buying interest emerged, absorbing the selling pressure and preventing further downside movement. The formation of multiple candles within this range, with a notable low point, indicates a floor where buyers stepped in aggressively. The significant drop followed by a consolidation and partial recovery points to a zone where demand might have overcome supply, establishing a potential turnaround point for the price. The interaction of several candles around this price band, including a pronounced low, highlights a level that has historically provided a buffer against further declines, suggesting a significant area of buying interest and support. This support zone is identified around the 202.90 to 202.91 price level, visible between November 11, 2025, 19 hours and 15 minutes and 19 hours and 17 minutes. During this period, the price exhibited a notable tendency to find buying interest as it approached this lower boundary, with multiple candles showing significant lower wicks, indicating that sellers attempted to push the price down but were met with strong buying pressure. The consecutive candles from 1915 to 1917, specifically with lows around 202.959 and 202.979 respectively, and highs reaching up to 202.999 and 203.0, show indecision and a struggle to break lower. This suggests that the area acted as a floor for the price, where demand was sufficiently strong to absorb selling pressure and initiate a bounce. The volume during these periods, though not explicitly requested to be analyzed for this output, would typically confirm the significance of such a price level if it showed increased activity. The presence of several candles interacting with this narrow price range, with a clear attempt to hold the lower bound, makes it a robust support area. The substantial decrease in price from 202.984 to 202.959 in the 1916 candle, followed by a rebound to 202.987 in the next candle, further solidifies this zone's importance as a prior area of consolidation and rejection. This resistance zone is identified around the 203.02 to 203.04 price level, observed between November 11, 2025, 18 hours and 40 minutes and 18 hours and 42 minutes. During this interval, the price struggled to break above this upper boundary, forming significant upper wicks on the candles, which signifies that sellers were actively defending this price range. The candles from 1840 to 1842, with highs reaching up to 203.038 and 203.034 respectively, and lows dipping to 203.018 and 203.004, clearly illustrate the point of price rejection. This indicates that at this price level, the selling pressure was strong enough to prevent further upward movement, leading to consolidation and a subsequent downturn. The cluster of trading activity within this relatively tight range, marked by multiple attempts to push higher that were ultimately unsuccessful, points to a strong area of supply. The high of 203.054 in the 1841 candle, followed by a drop to 203.034 in the next candle, highlights the presence of significant overhead resistance and the inability of buyers to maintain upward momentum beyond this point. This zone represents a level where sellers took control, creating a ceiling for the price. The current price of 202.919 is hovering near a critical 1-minute support level identified between 19 hours and 15 minutes and 19 hours and 17 minutes on November 11, 2025, where the price has shown resilience and a tendency to bounce. However, the 15-minute chart indicates a recent resistance zone around 203.085 to 203.148. Considering the proximity to both a short-term support and the significant downward pressure indicated by the drop in tick volume and price action around 7 hours on November 11, 2025, low at 202.316, coupled with the bearish indication from the Fibonacci levels where the lower Fibonacci price, 202.914, is lower than the higher Fibonacci price, 203.039, suggesting a potential downtrend continuation after consolidation, the immediate future suggests a cautious upward movement testing the immediate resistance around 202.950 before a likely retracement. This is followed by a potential small upward push towards 202.965, followed by another dip to 202.945, reflecting the ongoing tug-of-war between buyers and sellers within these near-term levels. The price is then expected to attempt another rally towards 202.990, where it may face renewed selling pressure due to the overall bearish sentiment and the proximity to the larger 15-minute resistance zone. The lack of strong bullish signals from Bollinger Bands, which are relatively flat and close to the price, reinforces this view of a range-bound or slightly bearish outlook in the very short term, with potential for a larger move once a key level is decisively broken.